Hello and welcome to today's stream where we will be looking at the third largest phone company in the world, which coincidentally uh, most people do not, or certainly Americans, uh, do not know about. Just give me a second as I make sure you hear my audio. All right, you can. Thank you. And so, yep, as we can see, so today, again, doing my when we do look at companies or more robust things. Let's go through like most recent presentate investor presentations to get an overview. This isn't like a stock pitch. It's more so an exploration of again the third largest phone company in the world, which I think again is just not known about because Xiaomi does not sell phones. Uh, Xiaomi does not sell phones in the U.S. Uh, and arguably for range of reasons that we'll get into in a second. But firstly, of course, what is Xiaomi? And Xiaomi is a it's of course hardware phone hardware company, right? As again, right, like what how to discern what a company is and what it's about. The company will tell you what they are about, right? Because the company, especially if they're public, they want to attract shareholders. They want right because again, the entire point of the stock market is so companies can raise money easier, right? It's much easier to raise money if your or at least a significant part of a reason the company's public is to be able to uh, raise money, raise capital. Of course, there's also like liquidity for the founders, for employees, among also just a sign of maturity. Uh, but certainly, like, a big point is like from the corporate finance perspective, you want to be liquid. You want to be able to, if you need to raise capital, as many companies did during COVID, you want to be actively traded. You want a high stock price. You can afford dilution. And so again, the company they want to attract you, right? And so they will certainly again, especially when it's the company's own presentation, they will put on the lipstick. They will show you the best version of themselves, and they will emphasize the best business segments that will attract your attention. And so again, Xiaomi. Again, I'm not too well versed with Xiaomi myself, but again, I did last night did some cursory reading about the global smartphone market, and so this drew me to Xiaomi again. Like it does slip to mind as being again the third largest phone provider in the world with an incredibly insane geographic reach in in the markets that it covers. Like again, like, incredibly massive. And again, interesting. Like many of it, um, again, it's not the most because much less competition uh, outside of China. Same as a lot less phone competition in the U.S. Right? So it's not the most, but again, like tremendous, insane reach uh, globally. So again, right, smartphones. But the big thing I want to highlight is they mentioned Internet of Things, right? Internet of Things, right? I think a lot of Internet of Things stuff is a bit BSy, right? Like like how much of a game changer is it that my fridge tells me if I need milk? But that's kind of like Internet of Things, right? And again, Internet of Things, just like quote unquote metaverse, is very broad. It's more of a buzzword that people and pundits can pillory whichever way they wish. But to actually dive into the details and to know what specific segments that what that means, it varies. For example, is metaverse just like a e-commerce platform for live showings of products? Then I'd say a lot of people would say that's a very practical and reasonable business venture for Facebook's Reality Labs to be working on. But of course, if you say metaverse and then it's like Ready Player One, which is like the pop culture analysis, then yeah, it's right again. So you have to be granular. You have to be specific again. As I consistently point out, you have to be specific because all of these things are complex. And so if you use generalities, you are not doing anything except just revealing your own lack of complexity when it comes to these, or knowledge when it comes to these discuss topics. So, and of course, we'll also be looking at the various. I will do a brief look at, of course, three financial statements of income statement, cash flow statement, balance sheet, and then look at how they compare to peers. Just again, this isn't like a stock pitch, but it does provide clarity. Again, especially the three statements, and it is always good to see like how other companies uh, show up in the mix. I just realized I forgot to include Apple and Samsung as comparable companies, so I'll off-screen draw it uh, in a text box. Apple, Samsung. All right, but and we'll just go through this presentation, which 40 pages. We'll speed through. Okay, again, so establishing what they do. The financials again not as important, especially when it's not in dollars. So, but again, user base again it's just you know pretty big. But again, right, like it's the Chinese company, but its business isn't really China per se, right? Again, only 135, which for 1.4 billion, it's like 10%, less than 10%. So, and again, that's the kind of thing, right? Again, like I think a lot of people like think about China as a market, and it's 1.4 billion. Like you wanna again, you want a lot of zeros, right? So again, it's sort of like United States, Canada, pretty much all of North America is its user base, right? So again, like the scale of uh, Chinese companies, I think is very easy to forget. So again, again, you think of like American centric perspective. It's very easy to forget. Just think about what these user numbers really mean in comparison to actual total. Again, it's like all of North America is a Xiaomi user. It's that comparison, which is just again something you have to wrap your head around. Um, Again, market share, not so much interest. I'm not gonna be forecasting the specifics of the smartphone market. Certainly, given that it is somewhat cyclical, I'd imagine. So certainly more so for like higher end like Apple or Samsung phones, right? Which is kind of like model driven in the hits, quote unquote. But and one thing that I should point out is a deceleration in the space, which again shows right like Apple being higher end consumers whose like elasticity who are willing to take on higher prices. And then you can see like how like again Xiaomi's it's a budget phone line. So it's naturally so it's a bit more exposed to like the again right. If you're of lower income, you're more likely to be a Xiaomi phone user. At the same time, your income is more likely to be hurt in the economic downturns, and so you cut back on spending. Uh, so it makes sense. Oppo is I believe OnePlus, the OnePlus brand. Again, smartphones performance. Congrats on navigating all the uh, chip complications, especially with being a Chinese company and the U.S. imposing various levels of restrictions. For example, it should be said, a tremendous reason for Xiaomi's like massive growth in revenue has been the United States just like single-handedly RKOing Huawei, functionally out of not out of existence, but significantly handicapping Huawei. Again, different story, but I think it is a bit. If you step aside and you think about what it actually means for the U.S. to do what it did to a company, um, interesting precedent, right? Uh, right, but again, right. So congrats, U.S. government, for the Xiaomi um, patents. Yep, that's the R&D, all good stuff. Mainland China. Again, smartphones, right? Tell you what they do, highlight what they want to do. flagship, right? Flagship's trying to compete in the higher end market, higher end um, stuff, right? Fact fashion conscious. Just again, right? When you have such uh, a large base of phones, and again, third largest company, like it's natural to have like you can branch out in the segments that you target, right? When you have that much of a capital base, for example, like net income of 1.7, excuse me, 3 billion of net income in the 2021. Again, 3 billion like of net income in USD. Um, again, for a hardware company, uh, like that's not bad. Give me a second. I'm on a different screen right now. I need to again 'cause this conversation is going to pivot into the similarities in in stages of development. To use that term between Xiaomi and Apple. And so I think it's going to be illustrative to look at the when it comes to like the cost structure of Apple versus Xiaomi to just see the difference in like what their cost of goods sold uh, to see like how much like what their gross margins are because they're both nominally hardware companies, right? Like okay, they both make phones, right? But of course, as I'll get into, and as Xiaomi is hinting at in their presentation with their Internet of Things, is that they're hinting at like subscription revenue, service revenue, which is naturally way higher margin than uh, having to build than just being a hardware company, right? Uh, let's shrink it down. Okay, Apple. Okay, a bit too lazy to get to crank out the percentage, but again, a free tidbit. You don't need an account to access the Wall Street Journal's website, of course. You can just look up the company's ticker, um, and you can, and they store it. I think it's a bit easier to look at, less complicated, less cluttered UI than Yahoo Finance. And most importantly, it shows you percentages. So as we can see, so for Apple, gross profit margin 42%. Under Excel, time to flex the Excel. Just hit you with the all its commands. You look, all right, a little Excel flex. Here the keyboard go. Apple. Forget Xiaomi's ticker. Actually, let's just Xiaomi. So 41 points for Apple. 41. 41.8%. Whereas for Xiaomi, gross profit is yeah Hong Kong listed company and all of like the big Hong Kong indices. We have to manually calculate, aren't we? Thanks, Wall Street Journal. You have American centric outlet Xiaomi 2021. Uh, yeah, gross. Yeah, I'm doing it off screen. I don't want to embarrass myself really quickly. Uh, but it's okay. So Xiaomi, it's basically I did a quick napkin math. It's basically 19. Gross margins are basically 19%, right? And so if you Uh, oh gosh, I'm forgetting my. I forgot my Excel command. Jeez. Equals. Right. So there's a 23% gross margin difference between the two, right? And so gross margins, as we look at the financial statement, gross margins, right? Let's look at Apple. Gross. So you have total revenue, sales, right? Which is just like all of the money that you take in. Again, generalization because there's accounts receivable. You can only recognize revenue when you provide the good and service. So is it so accounting speak, but generally, right? So like your top line, right? So again, simplification, ignoring all those important caveats for what uh, accounting caveats. So Apple took in 365 billion dollars from people like you and well, not me. I'm not Apple's target segment, I suppose. But but maybe you are. Right, so taking 365, right? Hardware, subscription, all that stuff. Cost of goods, and so they have cost of goods sold, right? I don't want to go too deep into what COGS are. Again, cost of goods sold, COGS is the shorthand. Um, right, but that's their gross profit, right? Which is revenue minus cost of goods sold. And so that's known as your gross margin, right? It's kind of like to make so at the most basic level, it's kind of like how much do you have to how much do you get to keep uh, when you make the product, right? And so naturally, you want to have you want so again like you want a good profit margin, right? And so you want a good you want to try to have as good a gross profit margin. Of course, like again, just you can just think about it intuitively. If you have to have factories and buy raw materials and be a very manufacturing like real world company, naturally you're gonna have a lot more upkeep, a lot more costs than you would if you're a software company, right? And it's much less costs to operate. Again, generalities, but right, just think about it and why. It's why like the cost, the gross profit margins of a software of a video game company or Google are very different from that of Vale, the mining company, or a waste management, right? Um, don't quote me on waste management. I have not looked at their income statement. uh, uh, excuse me. It is 4th of July, so there might be some firework fires. I just heard some fire alarms. Um, but okay, so that's gross margins, right? And so a big reason for that, again, Apple, Xiaomi, it's not apples to apples. It's different. But Apple, right? They have like they're not just a hardware company, right? They have a lot of online services, a lot of things, subscription revenue, right? And that, again, right to the point of like, well, if you're a software company, do you keep more of what you make, or your hardware company where you keep less than what a software company gets to keep? And so this kind of shows that that so again, like in numbers, you can kind of see that distinction in like the levels of development at Apple and Xiaomi. All right, because again, Apple it's very easy to think of Apple as having been like an obvious bet, right? It's very easy to think that way. But I should pull up a better charting software. But Apple, it was not obvious that Apple was like a surefire bet. Again, right? Like just I use like when Warren Buffett through Berkshire made his investment in Apple, got limit test, and made like Apple trading at 8, 9 times earnings, right? Whereas nowadays much higher, right? Because back then Apple was just a hardware company, right? And hardware companies again, right? Like so Apple was Xiaomi back then, and like its gross profit margins back then, in that price structure, and and of course, right? And so naturally, that's not as attractive as like software revenue, right? It's why there's so many software companies or that trade at much higher multiples, right, than a stodgy manufacturing company. And so making that upward level and evolution up the value chain in terms of like the services that you offer from hardware to software, recurring revenue. Again, underappreciated, uh, underappreciated reality of what occurred in like early 2010s to mid 2010s, and we're seeing it play out today, right? 365 billion in revenue, like 365 billion, like a lot of zeros, not it. Not billions. Again, law of large numbers, right? It's it's kind of hard to get that big. All right, so that's a comparison to Apple, right? And it's kind of, and so my working hypothesis is that Xiaomi, like they know Apple's playbook of how they moved up the value chain, in revenue, COGS or gross margin chain at least, and they're cognizant of that. And I will say, of course, like the average revenue per user, uh, uh, Excel is using an Excel spreadsheet is a surprisingly useful presentation software. Average revenue per user, ARPU. It's a common term, and so I'd imagine that Apple's ARPU is higher than uh, Xiaomi's ARPU. Like, all right, it's intuitive, right? Again, like as we established, right? Xiaomi's it's a lower cost uh, phone brand, so it's right naturally like less affluent user base, generally speaking, than Apple, right? Again, just like from I guess if you're an American audience, right, just think of who uses Apple devices generally, and compared to who uses iOS devices versus Android devices, right? And you can intuitively grasp it from that, right? But again, right? Like I don't think Xiaomi, like I think they're pretty open about it, and like how like they aren't really monetizing the software and the Internet of Things, and and that's clear what they're building towards, right? Which is an interesting end game. Well, not end game. It's always evolving, but it is that path forward. Uh, all right, so that's Apple. Just want to point out, it's like firstly, one of the things that does irk me a bit is that like, oh, it's so obvious that Apple was going to be a wonderful company to invest in, but if it was, then you wouldn't be trading at 9 times 10. Even back then, we're like again like, all right, like it was not obvious. And that to me, that's the genius of when Berkshire invested in Apple. All right, like it was not obvious. And so again, what it's symbolic of moving from hardware company, which deserves a low multiple, to software company, which deserves a higher multiple, right? So again, uh, incredible investment, and as you can see, right, clearly uh, paid off, and plus dividends and all that good stuff. All right, back to the presentation. Market share, Europe, LATAM, see India. India's a bit interesting, right? Because India banned TikTok and like kind of kicked out Chinese investment. Uh, so it isn't. But again, right? Like, does India have a India? India doesn't really have like a it doesn't have like a domestic phone manufacturing industry, right? Um, so I guess it makes sense to you. Yes. Again, a lot of geographies. This actually just surprised me. Like to be number two, and so again, and like a lot of these are like Western European, right? Or like what you think it would be like higher end markets. Um, so it is pretty impressive to see a Xiaomi's like massive, it's again like massive footprint, right? Again, like that's not so insignificant. Again, if you look at like just what global market share is, like Samsung's at best at a quarter, 20, like that's pretty impressive. And again, notice how they have no presence in North America. We'll get to that shortly. but they don't have any presence in North America. And yet, without North America, they already have 13%. If they have North America, and it's just like very like standard, like in the North America, like Mexico, right? And plus whatever segment of the U.S. population, like there is a budget phone constituency, and I think that if you look at Oppo or like Oppo through like a OneNote, clearly there's a segment for that. Uh, so it's a very impressive presence. Carrier markets, can't speak to too much. I'm not. I know again like part sneak peek, but like okay, so part of the reason why they're not in North America. Well, one reason is uh, it's just like the threshold on profits. Um, quote. I've not looked at the earnings calls, so I have to look at the company statement see it to back it up. But yeah, like it points out the carrier model that's in the U.S. right, where it's like it's you get like through T-Mobile, right? You'll uh you'll get better offers, or like instead of paying like fell out $1,000, you'll like get it at a discount as part of like your carrier plan, the carrier model, right? And again, like that's evidently that's not how much of the world operates. So and this is a broad point. It's always interesting to see how the rest of the world differs than the U.S. and where the U.S. is very much on its own. Again, like so carrier model seems to be one. Like payments, U.S. is very behind. Um, certainly to again, like we're like U.S. is still like extremely like credit card, whereas many other places have completely skipped that. Right. So just as a lot of the world has gone directly to mobile instead of with like the PC middle step. So again, again stuff for a different video, but it's always good to think about. Again, like the U.S. experience is oftentimes very much a singular experience that cannot be generalizable. All right, Internet of Things, good stuff, right? So all of this stuff all this stuff should be should be higher margin. I say that as it's only 15.6. They don't break out gross margins here. Now, gross margins probably won't be that great for the hardware business. But I suppose one thing they could be subsidizing it, like paying creators and stuff, like giving free offers to use the services. But again, like if anything is going to be higher margin than the hardware business, it's going to be IoT lifestyle. You can connect devices to the Internet of Things stuff. AI assistant, Mi Home. Uh, oh, and this kind of like builds out what they mean when they say Internet of Things. Uh, always nice stock photo. Air conditioners, refrigerators. Uh, all right, internet services. Okay, this is kind of more of like what I was talking about when it came to, or at least I think I was talking about. Hopefully, it's somewhat of a good analog. Monthly active users, MAU, uh, advertising revenue, into service revenue, gaming revenue. Uh, okay, all this should be higher gross margin. Um, monetization, grow. Okay, right, like so. So again, it's nascent stuff. Like you can hear a lot of people like we're very early to like some of these long trends. So there's definitely room. R and D. Smart EV. Man, everybody's working on a electric vehicle. Apple's working on electric vehicles. You have all the legacy people, legacy automakers, OEMs working on auto vehicles. I'm not sure how I feel about Apple or Xiaomi uh, working on electric vehicle projects. I mean, I guess in the sense like if you monetize the phone level, then you may as well monetize the car level, which is like when you're not on your phone quote unquote. But yeah, but I don't know. Auto business, it's not a good business to get into. Like if we're talking about the gross profit gross profit margin of Apple. Have you looked at the gross profit margin of Toyota? Actually, let's do that. Let's look at Ford. Let's look at Ford. I think Ford is more of a pure. I know like General Motors has like some like military stuff, but like Ford's gross margins, it would be very embarrassing if it was higher, 18%. Yeah, but again, right, like 18% versus 41%. Like again, you can have a very clear difference, right, in the gross margin structure. Okay, so that's the business, right? Right, phones, Internet of Things, and software, right? And the Internet of Things is software stuff, right? Uh, Higher gross margin. I'm not gonna go through these analyst reports. Nah, yeah, I don't think there's a need to go into the analyst reports, personally. But yeah, yeah, on the website you kind of see like what they mean about at least certainly the product offerings themselves. But again, right, like if I click on if I want to buy a Xiaomi 12, again, so pivoting to like the fact that again like the title of the video is the company you the quote phone company, which is again right clearly like they want to move towards like the Apple model of being more of a software company. Um, Again, like scroll through 12, look look at these great specs. Can I buy this? Can I buy this phone? This wonderful phone with all these wonderful specs. No, I can't. Right. Um, so, so again, to the point that the third largest phone company in the world is one that certainly the world's one of the world's at least most profitable phone markets, and which is U.S. has zero exposure at all to it. And it's something that kind of inspired the point because again, like Xiaomi, it's especially if like I admit personally, I interact with like Chinese internet companies much more. Like I use Bilibili. I occasionally use Douyin. I use WeChat or Weixin. So I interact with these things more. And so there's been from that like more exposure or at least like interaction with these companies. But even then, right, like I tend to forget about a Xiaomi, right? So just any other point. All right, so cost of goods. So gross margin is a bit challenged. We're just gonna do a quick run through of the financial statements. Let me get the pen. Cash flow from operations. Mm, then again, it's a bit. I don't know. If you subtract, if you subtract this, then what? This loss or is it a gain? It's a gain. Cash flow from ops. Lots of investment, right? Lots of capex. Uh, yeah, so not necessarily a free cash flow company in that sense. And then balance sheet. Uh, a bit a bit more levered than one would like, but nothing out the yazoo. And then it's a market cap $35 billion company. So the third largest phone brand in the world is 35 billion. Um, so so third largest phone brand in the world is half the half the market capitalization of Activision Blizzard, which is 61 billion, right? So, but again, right, and it kind of does make sense for Activision. Well, maybe not make sense, but I haven't looked at Activision's. I don't remember their top line revenue off the top of my head. Uh, I mean, top line revenue is not 51 billion, but again, like right, like why gross margins matter, like the amount of money.
Mhm.
Again, right, software business, higher gross margins. Valuation. These are the assumptions that tie into this stuff. So it seems that the and this is a source from Capital IQ, Cap IQ, which is a industry standard, like finance industry standard data provider from S&P Global, which costs a lot. 24,000 is like the lowest offering they have. So it's not meant for retail. Shout out to my university for giving access. So it seems that a slight increase in earnings per share, but expected decrease in EBITDA. Right. And so the assumptions are kind of guiding down, then it does make these assumptions seem a bit more. And so right, like EBITDA, earnings before interest, taxes, depreciation, amortization, right? Because like depreciation, amortization, like those are non-cash expenses. It's what you represent on your books to represent natural the decrease in value of an asset, but it's not a cash expense. It's not like when if you're a if you own a farm and your tractor loses $2,000 in value because it's a year older. It doesn't mean that you have to find $2,000 from your bank account and give it to someone. It's just accounting to just represent the decrease in value of an asset, right? Because you do want your book value of what your assets are to represent the decline of value, but it's not a cash expense, right? So EBITDA is a quote unquote proxy for, or at least a better proxy per se, for the cash a company actually gets to keep. Although of course some people would disagree with that. At 13x, 18x. Let's quick look at Apple's multiple. And Apple is like 20, low 20s is Apple. Apple like low 20s. And Samsung, give me a sec as I switch my other tab. And again, right, it's not these aren't apples to apples, right? Like Apple, it's not a phone company. Samsung's 8x. But again, Samsung does a lot more, does a lot of things, right? Like Samsung has batteries, and Samsung is one of the those like Korean conglomerate. It's a lot of different businesses. So again, not apples to apples, but just to give you an idea. And as you can see, 18x to the average of 14x. Uh, so yeah, but again, the multiple again, like it's based off like assumption from consensus assumptions that Cap IQ pulls. So maybe not the most indicative of much. That's that. Yeah, again, not a stock pitch, but again, I think it's always good, to, like at least for my own benefit, to talk through what, remind myself what an income statement is and what are its line items, so it's not for my own benefit. And always fun to talk about gross profit margins and to flex, to mess around with an Excel file. All right, and so here's uh, a nice visualization of a overall market share. Samsung, Apple, Xiaomi, and Vivo, Oppo, Xiaomi, all yeah, yeah, Chinese, uh, Vivo, Yeah, Chinese. Um, so yeah, talk about shipments, market share. Yeah, yeah. Of course, right. Phones are. It's not an inelastic good. It's not a life-saving medication or food. So it is elastic and sensitive to price. Of course, higher end users are less sensitive. Um, so that explains that distinction of uh, that dynamic. Mhm. But anything else? I could look at these. So yeah, okay. So to conclude, as we are hitting 40 minutes, um, so Xiaomi again, it's the third largest phone brand that Americans just do not know about, and frankly, like I probably have never interacted with. Even like back in 2016, 2017, when I when the U.S. market seemed a lot more open to for Chinese companies in like 2016, 2017, back when I had a Huawei Honor 8 phone. Of course, can't like like can't really you can't use a Huawei phone. So like if you wanted to, but secondly, like can't load Google Android API, no, not API, but Android onto the phone as the OS. So, but even then, right? Like not like nobody knew about what Huawei was, right? So again, just to show, right? But people do know what Samsung Apple is. Again, it makes sense, right? Because those are actually what you interface with. But again, like if you want to see how the rest of the world operates, right? Because the U.S. is again, as I said, the U.S. experience is more times than not a very it's not applicable outside, not the most applicable outside Alaska, Hawaii, and the continental U.S. Um, so at the very least, hopefully, this provided you a decent overview. You can hopefully recognize the Xiaomi, or at least know what it is when you see. Because again, if you go outside the U.S. or you probably will interact with people using a Xiaomi phones um, and all of that. So again, not a stock pitch, just a nice again for my own exploration of a company, a nice exploration. So at the very least, hopefully you learn basic principles of what Xiaomi does. Maybe you can learn about gross margin, ARPU, and hey, maybe you got a trivia question. So anyways, thank you for watching. Of course, this will be linked to uh, the investor presentation will be linked in the description of the video. Uh, but thank you for watching and continue to be safe.